Hey traders, Todd Gordon of tradinganalysis.com. I want to see if I can help you guys out with the Nvidia longer term technical position and the Elliott wave count. Obviously, hot a stock out there. I've seen a lot of conflicting opinions and a lot of people on Twitter who are trying Elliott wave, and it's great. I love they're getting the idea of Elliott wave out there, but there's a lot of bad stuff out there, unfortunately, that only further, makes the, your hope of understanding Elliott and putting it to work to help you trade and position your portfolios, it only makes it that much more difficult. So maybe you could share this and sort of get some get a different perspective, which is one that the market isn't gonna fall apart. And I'm bullish. I'm bullish, and I'm not opposed to bearish counts, but I think we have to say that resistance has been broken and we need to look higher, right? So again, share this perhaps with people who are pounding the table on the bearish side here. From the Elliott wave point of view, this is the proper way to do it. Here you go. All right, so what we're looking at here longer term, this is the monthly count. Okay, Nvidia came to market here 99 up in one, and then we did a big three-wave move here in B, a shorter C that's called a running flat, and that is indicative of a lot of coming strength, right? When C does not move back to the origin of B or the termination of A, okay? Then we're doing 1, 2, and then you're gonna do a smaller 1, 2, and I'll show you that degree right there, okay? And I'm just hiding the degrees just to make it simple. Okay, so let's work off of this, okay? So we should have a completed wave 3. We've pulled back here in 2022 to wave 4, and now we are on the wave 5 mission into one of 2 or potentially 3 upside fib resistance zones, right? So the channel that may seem goofy that I've drawn here, this is the proper Elliott wave 2-4 trend channel. So what you do is you connect the lows of 2, connect the lows of 4, project it off the top of 3, which is going to be right there, and that would allow you to find the wave 5 highs. Okay, so this is the monthly. Let's get down to the weekly. Okay, and I'm going to bring that smaller degree in. Okay, and the one thing you always want to make sure is you want to be able to find a good 5-wave motive impulsive move within the third of a third. Right? So this is the third of a third. I have a good wave 3 ongoing. This is the big breakout move from 2016-18. This is when massive percent gains were put down, and you could even break it down into a smaller 5-wave move, right? And you could even go another degree inside of this. So that's the third of a third of a third. That's like the epicenter, right? In a triangle 4, up in 1, 2, 3, 4, 5. Okay, so back to that orange circle degree that we looked at longer term. Okay, so where are we now? Now I've seen counts that are cutting off this orange circle 5, and just those of you who are Elliott wave guys might want to know this. I have this as primary degree wave 4, and we're moving up in primary degree wave 5 just off the top end of the screen. Now there are 2 fib resistance zones that we are targeting. Okay, the first one is currently being tested. The first one, which is a clustering of various fib studies from the different waves in the sequence, it goes from 355 to 475. Okay, we're trading now for, what is that, 86. So we're pretty much through this zone. Now, if we were to fail, okay, potentially we might be at a 5 of 3 top, and we have a significant decline to come. I don't think it works that way, and I'll show you why. But if we don't hold 475 resistance, the next zone of resistance is clearly labeled here, 711 to 752. Okay, that's going to be your next clustering of fib resistance. So off of the weekly, let's get down to the daily. Okay, now here is the, this is going to be the intermediate degree right here. Okay, I don't have it as completing yet. I have this as minor 1, minor 2, minor 3, minor 4, and I think we are mounting an attack. as I said, up into that second fib resistance zone, approaching the 700 mark. Now, that's going to be the end of the year into Q1 or 2 of next year. But, you know, I do think that we have evidence to say that we are reaching for 5 of 3. Now, getting back off of the daily, zooming back out, you know, let's keep the bigger picture in mind. And again, I know there's a lot going on there, but the zones that you want to focus on, again, are clearly labeled here. The first zone ceases to be resistance above 475. The next zone of resistance, which also corresponds with that 2-4 Elliott trend channel, comes in into the $700 mark. Okay, so that's the Elliott wave count that is currently in progress in Nvidia. You know, again, even if I'm off by 1 degree back here on the daily, even if we are in intermediate 3, which would go here, this is intermediate 4, I have them out here in the future, but even if I'm wrong, if that's intermediate 3, 4, and 5, well, the distance in wave 1 has to be a foundation for the distance traveled in 5. This guy was a 56% rally in wave 1, even with this running, or actually expanded flat in wave 2. So this guy was a 56% rally. That means you should have some relationship, you know, some balanced rally, either a 618 equality, a 1618 of that 60% rally in wave 1. So, you know, that's going to push you. I'm sneaking up here into your $650, $700 target in Nvidia. Okay, guys, hope that helps. That is the Elliott wave count in Nvidia. Please share wide. As I said, I appreciate new people coming in and trying to learn Elliott. The problem is everyone just comes in and you try to count 5 waves, and just the nature of it becomes counter trend trading. And they say, oh, that's 5. It's got to be it. Let's sell it. It's a living, breathing thing. It's fractal. You got to be moving in and out of time frames. That's why you have to be very good with your charting software. I use Motive Wave, hands down the best Elliott wave software out there, where we can quickly handle different degrees and move labels around. And you know, the thing that, and people say that, oh, it's no good because the wave count's constantly changing. I'm sorry, and I'm trying to keep this positive, but that's the dumbest thing I've ever heard. You're not a trader. You're as a PM, as a trader, your game plan is constantly being reassessed. If your methodology, if your way of looking at the markets is static and you say, I'm only doing this, you're going to get killed. You constantly have to be looking over your left and right shoulder, constantly adapting, constantly trading. I'm quoting Paul Tudor Jones in the Lost 87 video where he's doing Elliott wave. But your methodology should adapt to the market, and you're constantly reassessing your position now. And you're saying, is my money, the way it's being put at risk right now, and the positions I'm in, does it match up with the new incoming information that hits you every minute in this market? Right? So push back against people when they say, oh, Elliott changes, the plan changes. It freaking better change. Your game plan better constantly have to be, you know, put to the test, or you're gonna lose your money. Okay, so share this. I hope that helps, and see you guys in the next video update.